and I'd like to invite David back on stage as well for our panel, and also Ika Mobile, Managing Partner of Theta Consulting, and Fahim Kahir, Solution Consulting Director for EMEA Retail for WorldPay. We also had Stephen Bissoft from Revolut on the panel as well, but unfortunately he's fallen ill and has had to pull out. So it's about the value chain, the payments acceptance value chain is what our discussion's about. So I'm going to start with a very broad question. That value chain has changed considerably over the last 10 to 15 years. So how have legacy acquirers have had to adapt to that change? And Ika, I'm going to, get both, actually I'll start with Ika and Fahim just to introduce yourselves, and then I'll get into the questions.
Yeah, hi everyone. My name is Fahim Kahir, so I lead up the solution consulting team for our EMEA region at WorldPay. Been at the business for about 7 years, and for those that don't know who WorldPay are, we're a leading global payments provider, providing capabilities for in-store, online, and omni-channel payments.
Okay, then I will continue. My name is Ika Maibaum. I'm one of the managing partners of Theta Consulting. We're a consultant specialist in payments and banking, consulting both financial institutions and non-financial institutions, specifically also helping acquirers in setting up their strategies and implementing them for European markets.
So Ika, having worked with a lot of acquirers and PSPs, particularly those legacy acquirers, what changes have you seen them have to make to adapt?
Well, first of all, I mean, it's taking the merchant perspective, right? And we heard a lot of, let's say, the changing payment mix, the importance of alternative payment methods or local payment methods as they have been called. So, and I think we're in the middle of the change. It's still going on. International card schemes basically fighting back with their solutions in terms of not losing importance as part of their market. So that's probably good news for the acquirers in terms of their profitability and revenues. Bad news for acquirers in terms of their profitability and revenues is competitive pressure is still very high in the market. So there are a lot of acquirers, new fintech acquirers that are fighting for market share. So fierce competition. And I think what we need to look at in the future is the upcoming, let's say, changes. So we heard a lot about open banking, which is in the market already for a couple of years. We also heard about why it's not working since there's no standards, no unified APIs and so on. And I think we see in the future a few changes that might affect this. EPI as a broad initiative, now called Vero, coming up in several European markets as a new standard for account-to-account payments based on SEPA rails and instant payments in the end. So this can be a major game changer, also affecting acquirers in terms of how do they support merchants and how do they process payments actually. And also CDBC, like Digital Euro, you might all have heard of it, is a new option that we will face. It's enforced by the regulators, and also this will be something that acquirers need to tackle. And just a third point I would want to make as a pressure on the acquirers, sorry to say so, is the growing number of payment orchestrators out there in the market. So we see a lot of companies from the fintech space now offering payment orchestration to their merchants, basically allowing to switch acquirers much faster, and as a result of that, putting pressure on margins, which again is good for the merchants, but not so good for the acquirers.
Fahim, well-established acquirer.
So, firstly, legacy acquirer, that's quite, it can be misinterpreted. I think the important thing is that acquirers such as WorldPay or payment service providers, that we need to keep up with trends and what's happening in the market. You know, David's presentation around the local schemes and local payment methods highlight that. And I think acquirers need to just really kind of make sure that the value that they're providing to the customers is second to none. So looking at the industry, what's coming around, account-to-account transfers, that's a really hot topic. How have we brought that into our solution stack? enabling the right payment methods as well, right? So there's hundreds are out there in the world, but not all have a good market share. So just making sure that those right payment methods are taken by customers and really implemented there. And it's also kind of, you know, I think we'll kind of come on this a bit later on, but the data insights that you provide, you know, just making sure that we're able to provide you with the insight that you need. Yeah, and you know, payments, I've been in this industry for 7 years, and it's such a dynamic and ever-changing, and you know, the reasons why we come out to shows like this is just to understand what's going on. And as acquirers, we need to make sure that we're listening to our customers, but also listening to what the industry is coming out with. So, you know, there's a lot of noise happening around network payment tokens, and we're starting to see some traction in that this year. Yeah, so, you know, it's really just making sure that we're keeping up with the trends, making sure that it's, you know, moving away from the model of just as an acquirer, just authorizing and capturing transactions, but how do we add value into our customers by providing local and alternative payment methods, fraud provisioning services, optimized checkouts, that type of thing.
Yep, thanks for him. Igor?
Yeah, I want just to say that the chain, the acquiring chain has been changing, but the importance of new companies who focus on the merchant and consumer experience is very important, because the chain stays the same when it comes to card payments. Of course, there is clear acquiring bank, issuing bank, merchant and consumer chain, but more and more companies enter this area, becoming, let's say, a fifth player, right? Like a payment service provider who are actually focusing on providing the end-to-end experience, which all these players are not doing today. And the card chain is changing, while of course with the coming instant payments, I think the chain will shorten in many regions, right? So I feel that different players in the chain are focusing on different things right now, right? So big banks are packaging their offering, if it comes to payments, as a bank. Small players try to make the tech work, try to make some innovation to attract the merchants and make a service independently of the unit economics, because you know, banks can always give very good unit economics to merchants, but the small players, they need to do something extra to actually win the market. So that's what I think.
Thanks, Igor. The whole APM, what has that meant for acquirers in terms of the change that they've had to do, David?
I'd argue that merchants don't really care about acquirers. They don't care about what we call ourselves. Merchants have a requirement, which is, you know, we would like to accept payments, please. And our job is to make it happen. So, you know, I see ourselves, for, you know, lack of a better analogy, as almost, you know, waiters in the restaurant. If you come to us and you say, I'd like to accept payments in 5 different countries, it's our job to tell you that these are the payment methods which are relevant. These are the payment methods which are not relevant for your specific business model. These are the currencies you should be accepting, and this is what the payment mix should look like. So I think being too fixated on, you know, us being acquirers, and yes, we are an acquirer, but ultimately none of our customers really care. It's one of the payment options, or 2 of the payment options to be specific, that we offer.
Yep. Fahim?
Yeah, no, I agree with what David said. I think APMs are really important, right? And when you're thinking about expanding into new geographies, new markets, you need to have the right data, right information around how those customers want to pay, or you're going to be losing out on revenue if you're not enabling the right payment methods. I'm going to shamelessly plug in, we are launching a new global payments report later this year that kind of goes into the market. That's due out March 23rd, but that really kind of, you know, sets out what markets require what payment methods. And, you know, there's lots out there. There's ones that are specific for verticals, niches, and it's around enabling the right ones. You don't want to have a checkout page with 5, 10, 15 payment methods if your customers aren't going to be using it. You know, the point. You want to get the customer across as quickly as possible and as easily as possible. So really having a defined strategy is very important. But as an acquirer, we need to also understand that not all traffic is Visa or Mastercard. That we share some stats around Ideal in Netherlands. That's really big provider there. So just making sure that we've got the right ones that are relevant to the market, and also helping merchants out to ensure that they're enabling the correct ones and going into a market where a local scheme or a local payment method is pivotal for success.
Yeah, so that's all about the customer experience in terms of presenting the right payment methods for each local market. And you talked about Igor customer experience as well. So one observation I've had is 10 years ago, acquiring started to get became a commodity where it was very price driven. I've certainly seen in APAC a big shift over the last 5 years with a lot of fintechs coming in with a whole range of different value-added services. So, could I get Iko maybe for you to comment on, has there been that shift from price focus to value focus in the acquiring space here?
I think I would partially agree in the end. Well, because when we see merchants going for new partnerships, the initial decision is very often price driven in terms of, okay, can we save some money here on this transaction? I think the optimization potential, meanwhile, especially looking on the card rails, is very limited because the price level already is rather low, and there's a lot of, let's say, fees specifically looking at the card rails, which merchant acquirers cannot influence. So like scheme fees, interchange fees is something that is put on the merchant fees, which the acquirer cannot change. Still, there is a bit of optimization potential, which still can save millions of euros to especially large enterprise merchants. So still it is a topic. But value add is definitely important. And I want to point out 2 points here. Because value add does not necessarily mean always additional service or additional products that I need to give away for free, for example, so I can make a revenue on that. But I think also the type of service that is offered to merchants becomes more and more important from my experience, because we see that very often a good sale fails afterwards because the lack of ability of the merchant acquirers to deliver. And this has typically 2 points. One is IT. So not being able to provide a modern IT infrastructure, a good support and a good documentation to the merchant so that they can easily integrate. This is very often something where acquirers fail. Increasing demand on IT security requirements. And this is something also for the acquirers to learn. Because very often I hear okay, we're PCI certified, we're fine. No, you're not fine. Many merchants, meanwhile, have IT requirements from governance perspective that are even higher than PCI DSS. So you need to be able to cope with that from an acquiring perspective. And second thing that is very important from my understanding is providing good client support. So you're happy from a sales perspective that you made a deal, and then the issues start because there's no clear responsibility for the delivery inside the acquirer organization. You don't get support. There's a massive problem in onboarding the different merchant entities to the acquirer contracts. It won't run for weeks and ages, making merchants very unhappy. And then this is something where price doesn't help because they cannot make business.
Yeah, it's something I actually say to a lot of PSPs, is that if they did their job better in terms of that relationship management, there often wouldn't be a need to engage someone like a consultant to come in to assess the options, because if it's a happy merchant, they very rarely want to move,
yep.
Regardless of the price, as long as they're getting the solutions that they need. So,
absolutely.
David, do you have any comments on the commodity versus shift to value?
If the only thing you offer is 16 digits being punched into a field to be authorized and captured as a payment, yes, you are offering a commodity and you are a reseller of 2 payment methods with very little value added. And I would agree with you that you add value by other things. I think it's not a secret that payments do not work without issues. There will be issues in any merchant-supplier relationships. They might be caused by the merchant, they might be caused by the supplier, but there will be issues. There will be new unexpected situations. There will be new payment methods. And ultimately it comes down to what is it that you offer? Are you just offering standard rails where, okay, we'll authorize and capture a payment and hopefully pay you in one shape or another? Or are you buying a service? Are you buying someone to tell you there is a new up-and-coming payment method, there is a new trend, we think you should be integrating this, we think you should stay well clear of that payment method because it's not really well suited for you? If you're selling a service, if you're selling a relationship in an ever more fragmented segment, that adds value and that allows you to defend your margin because it does show some sort of a differentiation as opposed to just I'm looking for a single payment method which everyone offers and there's not much room to differentiate. Also, if you only offer a very limited selection of payment options without any value-added services, I find that you'll be more and more pushed to being a middleman, essentially, selling only to other payment facilitators or other payment service providers who don't need your value-added services because at that point all they're buying is your infrastructure and possibly your license. And there, you're happy to make a few basis points here and there, and that's pretty much it.
Yep. So we've talked about some of those value-added services. So can we go into that a little bit more detail, Igor?
Yeah. So I wanted just to add to the value-added services that it's people who work in any merchant company, and these people are spoiled, if I can say so, by B2C services provided by big brands, and when these people come to work, they see the experience of their payments provider. They open the account, they see how the transactions are looking, what's the fraud ratio, what is the approval rate, and they expect to see the same good experience with the provider. As David mentioned, the service, they expect to see the full service for their full scope of problems. They don't need to look for a separate company to deal with chargebacks. They don't need to look for a separate company to deal with fraud. They come to you, and it's very difficult for any merchant company, for any company to change a provider, right? To select a new, to integrate, to go through this selection cycle, negotiations and everything. And it's very important that the companies, which are now, I don't think we're called payments companies, we're like financial companies or financial service companies maybe, considering all the merchant needs in one place, to make sure that the experience is the key. The experience goes first, and the merchants can really use the experience you give to make decisions, right? So providing data insights about how your business works. Like I need to go to the payments provider, understand what's with my business, how is it going, what's going well, what's going not well, where I need to make an action to reduce fraud, how I need to deal with my chargebacks, and maybe some data about users, because we collect a lot of data about customers, the payments data, the product usage data, what payment method they prefer, right? From what country they pay. So all of these can be accumulated in a way that merchants do not need even to work with this data. They can just come and see, oh, actually, yeah, I have a lot of traffic from this country, or I have a lot of fraudulent traffic from that bank, let's say, from the issuer. So I need to deal somehow with specific problems. I don't need to investigate it myself. So I feel this is this additional value that the companies like ours can bring, and also utilize the data to help merchants to make right decision without going somewhere else.
Yeah, so the data insights has become a lot more important.
Yeah.
But you also talked about being a financial services company rather than payments, and I guess now more and more payments companies are offering lines of credit and capital and other services as well. Fahim, do you have any
I mean,
insights on this?
Data is very important. Just echoing what you said there. it's really kind of understanding and making those business decisions with the tools that your acquirers or your PSPs are giving you to help you make a strategy. E-commerce is an international shopping channel. You need to be able to understand how your customers are coming in, what currencies they're using, and you can unlock that with the data that you get from your acquirers and your PSPs. But in addition to that, fraud prevention tools are really important in stopping the bad traffic and keeping them out and letting the good people in. So I think, in terms of value, and what innovation, back what Igor said there.
Yep. And if anyone wants to send a question on Slido, please do as well. So I'll look out for that in a second. Ika, do you have any insights that you'd like to share on that topic before I move on?
I'd like to add, let's say, one more point to what what the others already have said, saying that optimization of the conversion is important. This is where acquirers can help. Fraud will become a topic, so it has not yet hit statistics, but we see that especially social engineering fraud is causing massive damage now, especially on the issuer side, but we should not look away from the acquirer perspective, because it will hit reputation of acquirers and merchants as well. So this will become a big topic in the next years. But maybe one more point, I think, where acquirers can really help in the merchant relationship, especially considering this whole bunch of payment method, and this is where it comes to payouts and reconciliation, because this is still a very big pain with all the different ways funds are being paid out to merchants and sellers, the way data is being reported, the way I receive settlement information, different formats which I need to process, where I do not have all the information that I really need to reconcile my open items and my accounting with the money that flows to my account. So this is still a big issue where I think there is a distinction between good and not so good acquirers, let's put it that way.
It's actually leading to a lot of new service providers that just focus on reconciliation and data insights. That's what I'm certainly noticing as well. Payments orchestration was mentioned quite a few times as well. So do you have any insights, shall I ask David, on is it disrupting the value chain, disintermediating it, or do you see it as helping to solve problems and an asset to acquirers and PSPs?
It very much depends on the payment orchestrator.
Why do you say that? So what are some of the differences you're seeing?
So the fundamental idea of a payment orchestrator is a good one. There are many different payment options, many other value-added services, your fraud management tools, chargeback management providers. It's a large ecosystem. Having a layer that you as a merchant can use to technically connect to all of these different third parties is a good idea. The devil is in the detail. If not executed properly, your payment orchestration layer or your payment orchestration provider becomes a huge liability, because you've given up your internal capabilities as a merchant and you've given the keys to the payment orchestrations layer. Now, if the payment orchestration layer cannot innovate, cannot integrate new providers in a timely manner, because that's ultimately what you pay them to do, then it leads to a lot of frustration. We have seen some frustrating examples out there. There is one other thing about payment orchestration layers where I would like to point this out to the merchants out here. Be very wary as to who pays your payment orchestration layer, because the payment orchestration layer ultimately should be paid by the merchant, not because your acquirers and your payment service providers are necessarily greedy, but because you want their interest to be undeniably, you want them to be undeniably on your side. You want them to be impartial. We have seen some cases where payment orchestrators have been asking for kickbacks, which sort of completely distorts the picture, and that they're not working for the merchant anymore. They have divided loyalties at the very least, shall we say. we don't see as many payment orchestrators due to the fact that we already are a sort of one-stop shop type provider. But there are some very good ones and some rather bad ones out there.
Is that okay? I wouldn't mind getting your perspective on that point. There is there a difference you see between first, second, and third generation payments orchestration companies?
Well, generally, I would agree with everything what you have been saying so far. It must be a well thought through decision whether to work with a payment orchestrator, yes or no. It doesn't make sense in any case. So, I mean, specifically, the bigger your business grows, the more differentiated it is in terms of how many integrations do I have, how many countries do I need to cover, how many payment methods do I need to cover. There is a certain tendency that it makes sense to work with a payment orchestrator to basically take off some of the pain of managing this yourself. On the other hand, everything what you're saying is true. You're getting dependency with another party. This other party is also taking cost out of, let's say, what you already need to pay to your acquirers. You need to be thoroughly in terms of with whom you should be working, in terms of exactly not happening such cases as payment orchestrators asking for kickbacks from the acquirers, which is definitely not good. And of course, you need to see that you don't lose your personal or the let's say the competence in your company to actually manage the payment value chain yourself, because it's very important for your business. And also you need to think of, okay, I have a certain dependency on the payment orchestrator in the end. How can I replace the payment orchestrator if it's necessary? So it does not solve all of your problems, but some of them.
I would add to it, not only, one of the reasons why, for example, people tend to have several acquirers or several payment service providers ultimately covering the same payment method is to avoid having a single point of failure.
Mm-hmm.
Once you have a payment orchestration layer in between you and your, let's say, 4 acquirers, you have just introduced a single centralized point which, if goes wrong, your entire redundancy and your entire multi-acquirer strategy has just gone out of the window. So there are some. I'm not saying all payment orchestration is bad. Far from it. There are some very good examples out there, but it's something that the merchant has to be. You need to be aware of what it is that you're introducing into your system, and you need to make sure that you're mitigating some of the risks which are inherently present within the setup.
So really getting good understanding of both the benefits and some of the risks and costs involved as well. We've just got a few minutes left, so I've just got 2 quick questions I'd like to ask. One is, Fahim, just on in-store payments, how can that experience be replicated, do you feel, or improved on in new sales channels?
Yeah, so new sales channels are popping up all over the place. If you think of TikTok as an example, right, you've got a lot of creators on that platform selling their goods and services. We've got loads of people moving to more app-based checkout journeys, and it's really using those new and innovative tools that are coming out, such as augmented reality, virtual reality, to utilize that technology to help your customers replicate what they could do in store. So if I was going to buy a new top, if I had the ability to see how it would look like on myself before I did the purchase, that'd be great, right? So I know what it looks like, if it looks good on me. And equally, you need to have a really strong payment journey at the end of it. So, you've kind of caught their attention, but you also need to make sure you're making it easy for your customers to pay. Benefits for retailers there, right? You're really you're bringing that in-store experience that we all know and love into a journey that you can enjoy at home. But it also reduces things like returns, right? If someone buys something online, they might try it on, doesn't look right on them. If they're able to see how it looked like beforehand, it's a really propelling, kind of a really nice proposition to have. So I think that's something that would be really interesting to see how we could implement that in real life.
Yeah, in Singapore, I was told a story by Love Benito, where their customers actually go in store to try things out and then order online, so it's delivered home. So they're not carrying the shopping bag. You mentioned TikTok, so last question for you, Igor. is support of those new social media channels essential for PSPs?
Yeah, I think as I mentioned, everything about experience, and the new channels are creating incredibly seamless experience for consumers. How they get access to content, how they interact with the content providers, and if we just embed the cumbersome payments process into this experience, it will not work. So the experience should be seamless and at the same time secure. But then you need to deal with a lot of other things related to payments, disputes, returns, and many other things which it's very difficult to understand how to embed these experiences in the TikTok or other content apps where everything is so cool and nice, but you need to deal with some real serious things there right after the payments, behind the payments, let's say. So I feel it's going to be a next generation of payment experience that will come. So now there are steps. The wallets are embedding very well into this experience, but I feel that we will face a lot of improvements on this stage, and both payments and post-payment experience will be really easier to understand within these platforms.
So lots more changes to come.
Yeah.
So time's up. If you could please join me in thanking our panel for the insights that they shared today. So thank you.
Thank you.
Thank you very much.